let's talk about Shriram Finance, which is surging today on the back of a good set of numbers. Their AUM growth is strong, disbursements have surged, while loan growth is better than analyst estimates as well. YS Chakravarti, the MD and CEO of Shriram Finance, joins us now. Mr. Chakravarti, thank you so much for joining us. First, if you can start by telling us about the growth that you've seen, right? Not only growth, I mean, asset quality has also improved. But first, on the growth front, what are you expecting to see by the end of FY24 in terms of disbursements? And what do you think both AUM and disbursement growth could look like by the end of FY25? I think, Mr. Chakravarti, you're on mute. If you can just unmute yourself.
Sorry about that. Thanks for having me here. We've grown by about 20% in this 9 months, and we estimate that we will be able to hold it, grow the fourth quarter also. And for the year, I think we are looking at 20% AUM growth. Probably the next financial year, the growth may be slightly muted. We are projecting anywhere between 15 to 18% for FY25.
Okay.
So that on the front.
Got it. Mr. Chakravarti, I think the standout point in your results has been your margins. I mean, able to improve at a time when the Reserve Bank actually went the other way. Now, the Reserve Bank actually imposed those costs mid-November. So will current quarter, you'll get the full impact. Can margins still be maintained and improved upon?
Improved upon, no. I think we'll be able to maintain the margins here, Latha, basically also because we do not have much of an unsecured portfolio. As you know, our personal loan portfolio is only about 4.6% of the portfolio. So some of those costs we were able to pass on, and a little of it we could absorb. Another reason why the margins have improved is also the change in product mix. You know, Q3 has been good for the retail, particularly my particular and MSME portfolio has grown well. So we have for margins.
Oh yes, you've done exceptionally well on commercial vehicles and personal loans. You could actually bring down. So the risk weights didn't hurt. But it will hurt your cost, isn't it? Because for banks which have exposure to NBFCs, the high risk weight is higher. So did your cost of funds go up in the quarter gone by? And will it go up even more in the current, in Q4, because again, of the full impact?
Point number one, our total borrowings from bank, out of our total borrowings, we have only about 26% from banks. So whatever is the increase in bank rates would not hurt our numbers badly, number one. Number two, as of now, we have seen only a couple of banks who have increased the rates, but going forward, probably we may see a 10-15 bips of increase in bank cost of bank borrowings, but that I don't think that should impact negatively. We should be able to have and maintain our margin rate 8.1, 8.2%.
No, but 8.99, I thought.
No, that's for the quarter.
Okay. Okay, for the full year, it's for the 9 months, it is 8.1.
8.65. It is 8.65, somewhere around 8.6, 8.65 for the 9 months. So for this financial year, we should be able to manage that. We'll see what happens next year.
Okay, so you're not guiding for next year. You're only guiding for the moment for the quarter. Okay, Prashant.
Mr. Chakravarti, hi, good morning. Prashant here. Just 2 points. One is you're saying 24 AUM growth 20 and then 25 between 15 and 18%, right?
Correct.
What's making you a little more conservative? I mean, are you just being conservative or are you seeing some slowdown?
No, we are always conservative. In fact, at the beginning of the year, we've guided for about 15-16% growth. So
and you will end up at 20. So should probably see you repeat.
So if you're guiding 18, we should do better than 20 by the current year standards.
I mean, there are also some uncertainties. So let us see how this goes.
Right.
That was going to be my question, actually. You know, normally the expectation is during elections or just before elections, construction activities slows, ordering slows. Have you seen any of that at all? Because your CV sales have done so well, will Q4 be a repeat or will it be a little moderate?
Sorry. On the commercial vehicle side, no, we have not seen any slowdown on the new vehicles. But anyway, we are see the used vehicle market has started showing good signs of growth because the replacement market is. I mean, the replacements are happening. So on the commercial vehicle side, I don't think we will see any slowdown in the next couple of years. I expect it to continue at the 13% growth for us on the commercial vehicles. The other products would slightly grow faster, but then we've also muted our personal loan growth. So personal loan also should grow by about say 17-18%, but it's on a small margin. So overall, looking at as I said, anywhere between 15-18. It's not a pessimistic estimate, but I would like to be conservative.
Okay, Mr. Chakravarti, slippages and write-offs, they also, in the quarter I'm talking about, also kind of normalized, right? 2%, 1.5% respectively. Could you, what's going to be the broad trajectory, you think, as we look into 25?
See, as of now, I think we should be holding it here, the credit costs. We are actually working on improvement. You could also see a slight improvement going forward. But the credit cost, we want to hold it around 2%. So I think we should be able to hold it there in the coming year also.
Okay.
If there's no shocks to the economy.
Okay, sorry. I was just wanting to rush to the other big news. Shriram moving out of, Piramal moving out of Shriram, and the sale, the purchase has been done by the trust. Anything we should know about the capital structure? Will you all want another PE, or are you in the know of another PE fund wanting interest? I mean, after all, you all are in a superb growth phase, and India is such an attractive destination. Are you all in the, is this a temporary parking with the trust?
No, I don't think so. I think the trust when Mr. Piramal expressed his desire to exit, I think the trust wanted to buy up. Okay. It's not a parking. The trust is wanting to hold it. The trust is actually a beneficiary trust. So whatever surplus they have, they would like to invest it and buy it back.
Okay. No, I can understand their desire also to increase stake. But just wondering, since a big kind of PE investor moved out, I was wondering if any more have shown interest and want to come in. Would you be in the know?
We are not in the, I mean, as far as I know, the SOT is not in the lookout for any more investors.
Okay. What about capital raising itself? I mean, the RBI's new rules have not really eaten up your CRAR, but the market is kind and your stock is ascending. So will you all use it to raise equity, raise capital at all?
We have not started the discussions as yet, but as you said, yes, market is kind. So probably we'll come back to you in a month or so and share with you if we have any plans.
Okay, since I was first to ask, I hope we will be the first to learn about it. Yes, Mr. Chakravarti, pleasure speaking with you, and good to hear that there is a decent year ahead, and you are, not seeing the margins peak off in this quarter as well. Thank you very much for joining us. Many congratulations.